joins now with some analysis on these numbers. Julia, perhaps let's start with Macquarie. What did you make of the result? It seemed like it definitely did beat expectations of that 10% rise, but also some pretty good commentary coming from the bank in terms of its outlook for fiscal 2014.
There's a very impressive performance coming through from Macquarie today and really showing that its business is rebounding as we see global markets normalising and doing well. In fact, if we have a look at the second half results, because we've already seen the first half numbers, the annuity business actually grew by 27% compared to the previous quarter. We've also seen capital markets, this is the markets facing part of its business, growing by 14% and operating expenses down by 11%. So we've seen a rebound in its businesses, expenses down, and that's been a good combination. One of the things that I've noticed about this result is that the effective tax rate has gone up quite substantially, up to 43.5%. That's compared to 29.8% previously. So Macquarie is paying more tax, but that's as a result of increasing profitability in the US. So that's actually a good sign for its underlying business. And return on equity also coming in at 8.9%. So that's a significant increase from previous numbers where we saw 6.6% and 7.8%. And then that final dividend, we know that the market's quite sensitive towards dividends at the moment, so $1.25, that's an increase of 67%. Their last final dividend actually came in at 75 cents, so it is an actual jump of 50 cents, so impressive there. It is only 40% franked, and that's because Macquarie does make a lot of its revenues outside of Australia, so it doesn't necessarily pay tax in Australia on all of its profits, and that's the reason for that partial franking. But all in all, a very strong result coming through from Macquarie, and I think the market's really going to back Macquarie on the back of its results. We have a look at Macquarie's share price. This is just over the past year. This is what it looks like. It's an impressive looking chart, but you can see that recently the share price has just been moving sideways, and I think this result will be the impetus to try and break it out of the range that we've seen it trading in and over that $40 mark in coming days. So a very strong result coming through from Macquarie there.
What about Westpac? Also beating expectations, and that special dividend likely to impress. But do you think we're going to see the same sort of euphoric reaction to the result that we saw to ANZ's earlier this week?
Well, there's not much not to like in these results. Strong numbers coming through, but I think the market was expecting a strong result, given that we did see ANZ's numbers earlier on in the week, and we did see ANZ, Commonwealth Bank, as well as Westpac reaching all-time record highs this week. Having said that, the cash profit up 10% to $3.5 billion. That beat expectations. The interim dividend came in line with expectations, so that was a rise of 5% to 86 cents. That compares to a rise of 11% that we saw for ANZ, and then Commonwealth Bank, which actually rose, lifted the dividend by 20% for the interim, but the special dividend's a bit of a surprise at 10 cents. So I think that's what's going to really boost the share price today. The net interest margin also coming in better than expectations. We were expecting to see 2.17% as a consensus, but it's actually coming at 2.19%. It looks like the wealth management business doing well. We've seen a higher contribution there. And if we have a look at Westpac, it's the second largest bank in Australia, the 11th largest in the world, and it's the third largest stock on the Australian share market. Now, if we do see Westpac shares outperforming BHP shares today, it does look like Westpac's set to take the number 2 place on the ASX. So Commonwealth Bank's the largest on the Aussie market. We may see Westpac at number 2 and BHP slipping behind to number 3.
And just finally, Julia, just for a broader look on what we can expect today, we saw a nice strong lift in the oil price overnight, which could flow through to some of the energy plays today. Obviously, the banks will be in focus, that financial sector on the back of those results. JB Hi-Fi in that retail space has just come out and upgraded its profit outlook on stronger sales growth. So what are you going to be watching the most today?
It's looking pretty good for the Australian share market. We're already up 0.6% this week, and this week has been another week where we have focused really on that yield play. In fact, the financials and the telecom sector, the best performing areas this week, up by 3%. That trend's expected to continue, especially with these banking results out today. So we are expecting to see that financial sector surging forward. Now, materials is the area that has really disappointed the market this week with a fall of about 3%. But as you mentioned, Liz, we've seen commodity prices jumping back. The CRB commodities index up by 1.2%. So we should see that sector of the market doing quite well. We are expecting to see a little bit of caution in the Aussie market, maybe in the second half of the session, and that's because we do have the biggest economic release around the world. That's the US non-farm payroll numbers, which are out tonight. The expectation is for 150,000 jobs, but it is quite a big release. But all in all, we're expecting to see a pretty good day. We've seen some strong results coming out of the banking space, a good lead for commodity prices, and as you mentioned, JB Hi-Fi are lifting its forecast in that retailing sector, so that should help that discretionary retail space today.
Julia Lee from Bell Direct, great to talk as always. Thanks so much. We'll touch base a bit later.
Thanks, Liz.
Just to bring you across a bit more detail on that JB Hi-Fi report, it has just come out with a bit of a sales and profit update. So it's now expecting sales in fiscal 2013 to be around $3.3 billion and NPAT to be within the range of $112 to $116 million. Previously, it was expecting sales of $3.25 billion and NPAT of between 108 and 112. So a nice lift expected there. Interesting though, it comes on the back of yesterday when we saw Citi come out and actually downgrade JB Hi-Fi to a sell with a price target of $11.80, saying that while sales have improved, it all leads to think that the company will perhaps beat consensus with that, but gross margins still very much under pressure, and the stock's starting to perhaps look a bit expensive, according to Citi, given it has run hard over the past few months. So JB Hi-Fi, one to watch when trade gets underway in just under an hour's time also.